It is not a good time to be an investor in Chinese stocks. Today, TAL Education Group has a market cap of 4 billion after losing 69% of their market value in one day. Just look at that. Can you imagine what a steep fall? And that's not even the worst of it. If you look at the 6 month chart, it's down by 91% from highs of 52-week high was $90.96. It's like some sick joke. Just this stock is absolutely getting decimated. And there's even collateral damage. If you look at Alibaba stock, it's down by 4%. That's like the Amazon of China. Baidu stock, that's like a Google of China, down by 3.6%. Completely different industries. But when one Chinese stock suffers, the rest follow. If you look at Didi, their share price is down by another 20% today because the Communist Party in China, is considering unprecedented legal actions against Didi for basically listing on the New York Stock Exchange without the full Chinese Communist Party approval. And you do not want to mess around with the Communist Party. So we're going to be talking about whether TAL looks like a good buy at this point, okay, just from a pure technical standpoint, or like what's going to happen with this stock, why it's down by 60%, close to 69%. That's even like, what a number, 69. It's like some sort of sick joke, like I said. So we're going to be talking about whether this is a buy or you want to steer clear from TAL Education Group. So yeah, welcome back to another video. Let me know what you think, first of all, from this downward move. Is this just the hedgies trying to manipulate the market? Is there actually like a serious consideration that, not only will this stock be forfeited on trading from the New York Stock Exchange, making it go to the over-the-counter markets, or will it be taken private? So if you don't know, TAL is a Chinese holding company that offers after-school tutoring, basically, and it's right now a for-profit organization for students in primary and secondary group, of course, based in China. And the Chinese system takes education very, very seriously, to the point where a lot of kids are stressed out and have health problems because of the way that they're managing education there. Right, so a Bloomberg article came out that basically said that China is considering asking companies that offer tutoring on the school curriculum to go non-profit, according to people familiar with the matter, as part of a sweeping set of constraints that could decimate the country's 100 billion education tech industry. The shares sank. The platforms will likely no longer be allowed to raise capital or go public, asking to not be identified because the information is not public. Listed firms will also probably no longer be allowed to invest in or acquire education firms teaching school subjects, while foreign capital will also be barred from the sector, one of the people said. So this is huge news. What will happen? I mean, now the shares could again be delisted from the New York Stock Exchange, go to the over-the-counter markets, and if that happens, the stock will still be available to trade. Maybe there's a time frame from which they will have to basically take the company private, because if they consider making it go non-profit, basically it becomes, kind of like a closely linked to a government organization. So this would be really, really bad news. Making the sector non-profit is just as good as eradicating the industry altogether, said a fund manager. The regulations on financing are a major surprise and show that to the authorities, this is a matter of no small importance. In the short term for the sector, any news will be bad news. So a lot of people are taking on a sell now and think about the decision later type of mindset when it comes to Chinese stock. Okay, any negative news, just stock gets absolutely decimated, like 69% down in one day. That's a huge move, and that's a risk you take when investing in Chinese stocks. I own shares of Alibaba and Baidu. I'm of course considering buying more based off of Baidu moving down by 3-4%, and as well as Alibaba. And I mean, like, I just don't know how long this can go on for. At the end of the day, I do not think the Communist Party's wishes are to restrict the growth of emerging industries in China. I think that's the least thing that they want to do. They just want to make maybe a more regulated type of structure when it comes to investing in education, right? And of course, because China takes seriously their investment in education, maybe they just want to have a more regulated approach. So this is just like talks of making these companies private. Who knows if China will actually go that far? But from my perspective, if you think that still, you may bargain one way or another, 50-50 shot. But I mean, if this stock goes back from $6 to $20, you've more than 2x your investment. So now could be a good time to actually invest, all right? And a lot of people have been saying the same thing with Luckin Coffee. They mismanaged and fraudulently bashed their accounting books to make the company look better than it actually was. Stock went from like $50 all the way to $2 before now going back up to around $20. And now it's listed on over-the-counter markets. They were delisted from the New York Stock Exchange. Again, it's another Beijing type company. So, there is potential reward behind all this negative sentiment. And I always preach, when there's blood in the streets, that's when you want to buy. And I mean, a 69-70% move down, to me, that's blood in the streets right there, okay? And now could be a pretty good time to invest. So I might wait for potentially the stock to settle down. Just looking even at the chart and indicators, like 3 red days in a row where this stock was outside the lower Bollinger Band. I mean, like that's an incredible move downwards if I've ever seen one. And that's huge, We're looking at the RSI 16 right now. Anything below a 30 is oversold. You're looking at RSI of 16. That's just ridiculous. When you're looking at the financials, I mean, this company, if you go to the summary page, it'll show you, hopefully that right here. This company right now, the price to sales ratio is less than 1. They did 4.5 billion in revenue in 2021. Okay. The company's market cap is 4.1 billion. Usually companies trade at like the low growing companies. You think of like the Walmart or the Walgreens or something like that. They trade at a price to sales ratio of like, I don't know, 3 or 4 or something like that. To trade at a price to sales of less than 1, like that's a bargain, okay? Especially if you think that they could potentially, especially at the rate that they're growing in. They're growing at around 30% per year. So I mean, the upside is definitely there if the Communist Party decides to maybe take a step back. And allow that these companies, maybe they'll just have to regulate the way that these education platforms are run. Maybe not privatize them and make them nonprofit, but potentially offer students cheaper access to these tutoring companies. So, this is like 35% growth current year. 2023, they're expected 31% revenue growth. You look at a company like that with a price to sales ratio of less than 1, like whoo-wee, like that's a steal, okay? But again, you have to understand the risks, right? And TAL Education Group did not comment. They said that it's the company's policy not to comment on market speculation. So, a lot of mixed news that you could sift through. If you want to be safe, I'd recommend buying Baidu stock and Alibaba shares, okay? I own both of these companies. They're solid companies, still have incredibly cheap price to earnings ratios and fundamentals in general. So, I mean, PE ratio of Baidu trailing 12 months is 8 right now for a company that's growing double-digit growth. Like, wow, that's something. And then on the other hand, you see American tech stocks. I mean, I own Facebook shares too. I want Facebook to succeed. Up 6% today. Snap reported great earnings, up, today it's up 24%. Like, huge contrast if you're an American investor in American stocks versus American investor in Chinese stocks today. S&P reaching all-time highs, whereas you look at Didi, you look at TAL Education Group, Alibaba, those stocks are bleeding right now. So yeah, if you're a risk-tolerant investor and a contrarian investor, now is the time to buy Chinese stocks and shy away from American tech stocks. Because a lot of the growth is priced in. I mean, although Facebook, I still consider it a steal, and that's why I still own all my shares of Facebook. But yeah, make your own decisions. I'd appreciate a thumbs up and subscribe to my channel if you haven't already. Also, please feel free to check out the Discord link right here. There's a lot of cool information that we've been talking about, so link is down below if you'd like to join. And if you want to support the channel, there's also a couple of links to join the channel down below. So again, thank you so much. Take care, and I'll see you in the next one. Love you all.